What really is a turnaround? If you can just help us demystify that. Is it really about sort of buying controlling stake in a company, firing some people, improving capital structure? What really is a turnaround?
The narrative here very clearly is that there has got to be change. There is a fresh mind, a fresh look at everything that needs to be looked into. Whether it is the financial structure, the capital structure, whatever it is, all of it, falls into the basket, and one has to take a, comprehensive view about it. With that only, I believe a turnaround can actually be brought about.
I want us to rope in Reshmi here. Any interesting revelations in diligence when you do on stressed assets? How is it different from growth transactions diligence?
There's nothing called a good promoter or a bad promoter. There is a hypothesis about how you're going to gain from this transaction, and that's why you are going for it. And our job usually is to test that hypothesis. Sometimes it's, well, I want to do, an asset search on this person. I want to see how much money they've stashed away, not because I'm going to go after it, but tomorrow when I need them to come and, put their weight behind the business, what's their financial wherewithal, what's their motivation. So, it's a little bit of looking in the crystal ball.
Talk about some of the transactions that you're sort of at IDBI Capital, that when you talk to investors, what the challenges that you are facing in sort of conclusion of those transactions.
So, in the process of interaction with the lenders, again, it is like a valuation and timing and number of banks. Each deal actually, just yesterday also we were talking, say we need to manage 35 banks to take a small decision. One case is there where actually 34 banks have agreed. Only one bank is keeping it. Investor is ready with money, but one bank is not agreeing.
Anurag, you want to add to that what Reshmi just said in terms of diligence and what you're seeing in the West, perhaps, what's happening here?
The important piece, I think, is one, we're basically in a situation where it's all just coming with a lag. So my general sense is, I think, I don't want to use the example of a frog getting boiled in a pot, but the fact is, all of us who are here are spending a lot of time here, and as I spend more time, perhaps I'm guilty of that too, forget for a moment that we're exactly halfway probably through a transition from a $300-400 billion economy to a $4 trillion economy or $5 trillion economy in the space of 25-30 years. So we're halfway through. The changes behind us are going to pale into insignificance relative to what's ahead of us.
Each of you to talk about how does control/restructuring or distress play out into your immediate deal pipeline.
Yeah, look, I think we are engaged in a lot of turnaround situations. Unlike Aditya, our business is to go into situations where business is meddling. It may have a tricky balance sheet. We can provide capital to sort the balance sheet out, and we can provide management to help turn around. It has to be in a buyout situation. I wouldn't even say control situation. A lot of those have to be in a buyout situation because you have to do a lot of deep surgery, and a lot of promoters generally don't want to take the hard calls.
Interesting. So mid-market buyout, less than 500 crores. Is that game that you'll play?
No, I would say, look, we would like to do more, but I'm just saying I would like to do things which can close.
I just forgot the rapid fire. So one word and one word answer for this. Dr. Sahu.
Yeah, refreshing.
Okay. Nagaraj, SBI.
Number one bank in the country.
Avrish, turnaround.
A lot of smoke, got to see the fire.
Aditya, GMR.
Partners for the last 15 years and another 15 to go.
Narayan, deal making.
Not my cup of tea.
Reshmi, last word, diligence.
This panel is not enough to,
Okay, great.
give you everything.
Thank you so much, and I think let's hear it up with the panelists. Thank you.
The last panel, the topic of discussion is asset reconstruction companies. I would like to start by asking Mr. Bansal, from the bank point of view, what is your view in terms of our ARCs adding value?
No, they certainly add value, but only thing is maybe to need to understand this, then we have to go slightly in the historical perspective. When we started ARC business, initial business was considered as an agency business. So to some extent, yes, what you are saying, they concentrated more on recovery. But today we find, I think they are adding value and they are thinking of resolution. So they have to be a partner in the resolution strategy. I think that is what we expect as bankers from ARCs.
Already 3 phases we have seen now. The first phase was what Bansal said as the agency. ARCs were conceived as agents for the banks. The second phase started somewhere in 2013 when fresh NPAs were sold to ARCs, but that agency model still remained. Third phase is what we are seeing during the last 2 years. In fact, a lot of effort on the part of the regulators to making the business easier to do, raising of capital. See, one of the biggest challenges of this industry was raising capital.
The way we looked at it is, what is the key compelling point for getting into this business at this point in time? And with the utmost respect to the existing players, we see regulatory will, we see political will, and we do see a smashed banking system in real terms that is looking to be cleaned up.
I want to know, players with your background, what kind of value addition do you think you'll bring in stressed assets management?
If we are going to do subsequent valuations, and every 3 months we do a valuation, by the time we reach a realistic valuation, probably, it may be a couple of years before you actually reach the right valuation. And, I would always say that probably stressed assets are like ice cream cones. The more we hold on to them, the more they melt. Probably one needs to take a decision right if one has to derive the right one. Yes, something which is valued X today is not going to possess the same value couple of years down the line. So one needs to be really, realistic, and, fortunately the bankruptcy code has put a timeline forcing everybody to take a decision.